So Blake, we were talking earlier about a discount rate and how consumers view the future savings of electric vehicles, their cost savings. They see it a little differently than economists. If you could explain that, please.
Sure, and this relates to this broader literature in energy efficiency. There's even a name for it, the energy efficiency gap. And it comes down to, when people are weighing spending a little bit more today and then getting savings in the future, even if those savings, if we discount them at a reasonable discount rate, something akin to the cost to finance that thing, people don't equate those one for one. There was a recent study just came out last week looking at this exact question around how people compare the purchase price of a car to future gas savings. And they found that people were willing to pay only about 25 cents to save $1 of discounted gas, to save $1 on future discounted gas at a 4% discount rate, which is roughly what you would have for a financing cost in a car. So to an economist, that's puzzling. That's one of those behavioral abnormalities we have. I mean, it can be explained by uncertainty we might have, but it fits in this realm we call myopia. So you're very short run thinking. And so that does make it a little challenging when you make the arguments that an EV will pay for itself with fuel savings over, say, a 5 to 10 year time horizon. People tend not to be willing to look that far. But a 2 year time horizon is different. I think that that's in the realm of, you don't need to be worried too much about discount rates when it's that short of a time period. And that's what we're talking about now in British Columbia. It's that short of a time horizon in terms of getting your payback on the higher cost because of these
Right.
subsidies.
I'm a little curious. Does the energy efficiency gap begin to close as consumers work their way up the S curve and they become early adopters and then early majority adopters? Does their perception change?
I'm not sure. I think it's a different issue. I mean, there could be some overlap in the sense of um, if one argument for the energy efficiency gap, or in this case, the unwillingness to value savings in the future, is simply uncertainty. I don't believe the automaker when they tell me I'm going to save $2,000 a year. Well, the more neighbors you have that are telling you, that are showing you their electricity and their gas bills and saying, I am saving $2,000 and I'm your neighbor, I'm not some economist on YouTube telling you this, they'll believe them. And so that we might call like a cohort effect, a beneficial cohort effect. So that's one way where I'm sort of somewhat, I'm generally not too supportive of EV subsidies from an economic standpoint, but I am in a limited sense. So a very short term rollout of these, not big dollars, because the more you can get some people into that, the more you can create this cohort effect that reduces these uncertainties, makes people a bit more comfortable getting into them, and there will be benefit in the long run of people getting into
Right.
EVs.
Given the energy efficiency gap and the cohort effect and all of that, do you think that EV manufacturers will eventually, or maybe very quickly, come out with financing models that are different from the existing ones in a way that the telephone carriers brought out different financing models for smartphones?
Great question. I mean, that's one thing when you think about Solar Cities model. So they were the seller of rooftop solar, mostly in California. They partnered with Wall Street banks to offer financing where it was effectively the savings on people's electricity bills were the way to finance that. So people didn't have to pay the big upfront cost. They paid sort of what their typical bill might have been in the past or a slight savings from that. And the difference was recouped in a sort of a green bond. Um, that might be challenging for the traditional electric vehicle makers because they are not the sellers of power nor gas. It's different markets, but there leaves some scope for partnership because you're right. You're overcoming a bit of a behavioral failure. This inability of ourselves to value the future, in part because there's so much uncertainty. If they have less uncertainty, that's an area for a beneficial trade. Maybe there's scope for them to get in there and effectively monetize those fuel savings and make it cheaper for people up front.
Well, here's one of the questions I've always wondered. So, an electric vehicle requires a lot less maintenance, so less cost on that side, but it also generally lasts a lot longer. And we're talking now, EVs generally are considered to be half a million mile vehicles. and manufacturers are working towards making them million-mile vehicles. And therefore, it seems to me that finance companies might look at that and go, well, look, if this car lasts a lot longer, has value a lot longer, then we can stretch out the payments and bring the monthly payments down. And in that way, we can use financing as a way to speed up the adoption rate. I don't know. What's your take on that?
No, I think potentially, and I think that is an area where when you're talking about those sort of radical changes in our perception of lifespan of a vehicle, that's an area where a consumer would rightly be suspect, rightly be uncertain and cautious in that. So if the manufacturer has far more confidence in that, and there's a bit of an asymmetry of information and knowledge there, and they have it, um, that's potentially an area to bridge that gap. If they want to effectively stump up and underwrite the fact that the cars are going to last that long, let them bear the risk of that and share in the benefits. That probably an area of beneficial trading of risk. So those sorts of models about financing, making things easier. EV subsidies are kind of a blunt tool to do that. Here's just some money up front. But there might be scope for the private sector to look at these areas where they don't perceive the risk or the uncertainty as greatly as we consumers do. And that's an area to get involved in financing.
Right. And it seems to me that there has to be a transition from public finance and subsidies to the private sector at some point, because otherwise the subsidies just become too large for provincial and the federal government to finance.
Absolutely. I think I read a news report that the BC subsidies ran out of money last Thursday and had to be refunded on the Friday. So, I mean, this is where economists like to draw the distinction between efficiency and effectiveness. There's no doubt in my mind that the rebates or subsidies will be effective in terms of boosting the market share. Subsidize anything, you'll get a lift in what people demand. But there's a big question on cost effectiveness of these. And so I'm okay with sort of a limited rollout of these to sort of get the ball rolling and get past the early adopters and get these cohort effects and infrastructure benefits happening, but then very quickly step back from public funding of these. Of course, that's all conditioned on our favorite topic, Markham, the carbon tax. All of that is predicated on having something to reflect the true cost of GHG emissions from a global and external perspective when we make that private decision by gas. So if that's in place, you don't need to deal with that externality through EV subsidies. People can make their decision they want, taking into account the true cost of gas.
Well, what do you make then of Simon Fraser University energy economist Mark Jacquard's argument that in fact carbon pricing, well, it may be more or less efficient than say subsidies or he calls them flex regs, which could be like mandate. But really, when you balance that against the political pushback on carbon tax, he said subsidies and mandates are really a much more effective tool for speeding up the adoption of these clean energy technologies. What's your take on that?
Well, there's a mix. I mean, there's a few things. So there's the clean fuel standards that BC has, which would be in that realm of flex reg. Those are well hidden. They're probably an interesting comparator to carbon taxes in the sense of politically, for sure, they engender far less anger or ire or political opposition. They're very well hidden and not known, but they contribute to the fact that gas prices are significantly higher in British Columbia right now. They're a key component of that. I don't think many people realize that, but it doesn't take long for those, or it doesn't take much for those sort of hidden costs to come to the surface. But they might be a decent example where they act in a similar manner to a carbon tax in terms of affecting decisions in a pretty broad way. So I'd sort of somewhat support Mark in that area. I think we would probably both agree in the area of EV subsidies. Those can create constituencies. So if you're a would-be EV buyer, you see this as a carrot and you like it. But of course, these carrots need to be paid for. So we can't fool ourselves when we talk about carrots versus sticks, that there's no, carrots are all free money. They need to be paid for. And it's quite well known that the EV subsidies are a very costly way, at least in the short run, to incentivize GHG or to get GHG reductions. And there's also the regressive nature. They tend to fall, the benefits tend to fall more on wealthier households. Those things combined, I think, I'm not convinced that EV subsidies make a strong or a big political win necessarily. But I'm not a politician. That's definitely not something I pine on well.
But before we end the interview, I got one last question, and that's about your colleague in the School of Public Policy, Jack Mintz, who argues that there should be only a carbon tax and no regulations, and that's the most efficient way to reduce GHGs. What's your take on that, given the context around, we've been talking about electric vehicles and.
So, I get the argument in theory. If the only externality we care about or have in the world is greenhouse gas emissions, yes, that's the Pigouvian tax is the recipe for that. But we know that's not the only externality. There's market power in production of vehicles to a degree. So we have fuel economy regulations to shift producers towards vehicles that are lower emission because they can exercise market power and put themselves in vehicles that have bigger margins. But we also have these, some people call them internalities, so these behavioral irregularities that aren't imposing external costs, but they might be making me make decisions that aren't in my best interest. Things like we talked about in the energy efficiency gap. So not valuing fuel savings beyond 2 years time frame. I should be valuing those. So either the private sector comes in, like you've discussed, and creates financing solutions. So that's one potential solution. But sometimes we do have these regulations that do have to come in because a carbon tax, if it's affecting our decision on gas prices and it means we'll save money over time by not buying gas, we might not be willing to take that into account today, or we will heavily discount it. And that's one justification for something other than a pure carbon tax. But, I don't think I'm as purist as Jack, but I am sympathetic to the idea that, pancaking more of these things on isn't necessarily where we want to be. But of course, as we've seen, just a pure carbon tax, especially at a level that we deem necessary, is facing heavy challenges. So the more we push back on the efficient solution, the more we're going to get of these other ones.
Blake, thank you very much. Really appreciate this, and we'll look forward to chatting with you about the electrification of transportation in the future.
Cheers. Thanks for having me, Markham.